another Smart Silver Stacker silver live stream. And in today's episode, I want to talk about where silver may be heading next because it seems like following the Fed's FOMC meeting yesterday, there seems to be just some uncertainty in the markets. And that's kind of understandable because the Fed, they're kind of sending mixed signals. And we're going to talk about why they are doing that, what is motivating the Fed at this point, and kind of try to just interpret some of what we heard out of the mouth of Jerome Powell, the chairman of the Federal Reserve, yesterday at that Fed FOMC meeting. And also, I want to talk about how ultimately the Fed's decisions here regarding monetary policy, they are going to lead to a situation where we have more dollars chasing less silver, and what that means for the price of silver. Because I think we all know what happens when demand exceeds supply of something, what effect that has on the price. It means the price is going to go higher. Not guaranteed, of course, but I think when you go over some of the information I'm going to provide you with today, I'll let you draw your own conclusions. But to me, it paints a rather bullish picture for the price of silver and for the precious metals markets, really specifically silver, though. We're going to focus on silver today, not talk too much about gold, except for the fact that I think silver is going to be going up relative to the price of gold. Now, we know we had the FOMC meeting yesterday. I want to briefly look at the chart of silver. This is the one-day chart. You can kind of see some of the price action we had following that meeting yesterday, and it's been kind of topsy-turvy, we did end up getting a quarter basis point hike to the federal funds rate. We did not. We did not get the hike. Hold up. We went live here. I can't edit that out. But we got the skip. We got the skip, which is what markets were anticipating. If you caught my live stream earlier this week, you know that the Fed was kind of broadcasting that they were going to skip this rate hike. And then we got the CPI, the inflation data, on Tuesday, which was basically in line with expectations. And I think that that was a big part of the catalyst for the Fed to go ahead and skip this rate hike. But the thing is that the Fed's sort of sending mixed signals here with this rate hike. And I think that that accounts for some of this topsy-turvy movement that we're seeing in the price of silver. In this silver chart here, courtesy of SD Bullion. Don't forget, you can always buy your gold and silver at sdbullion.com, today's video sponsor. And right now, new customers can still get gold or silver at spot by visiting sdbullion.com/news. So make sure you check that out if you're interested in that spot deal. But what do I mean the Fed is sending mixed signals? Well, they did skip the rate hike, but this was coupled with some very hawkish talking points from Jerome Powell. I mean, he indicated that while they are pausing, inflation is still high. They still have a way to go in their inflation height. He pointed out that none of the members of the FOMC indicated that there would be rate cuts this year. So according to Powell, that is off the table, although I do want to get into some of the possible catalysts for why we might see some rate cuts still this year, because, I've gone over this several times on this channel, but the Fed is in the business of trying to control market perceptions. They want to get inflation under control. One of the ways that they're doing that is they're hiking rates. They're proceeding with their quantitative tightening, however slowly. I mean, we're still, well over $8 trillion on the Fed balance sheet. And I still believe that we're going to see much, much higher numbers on the Fed balance sheet moving forward eventually. But, the Fed, they want to act as if they're still very tough on the rate hikes. And they want to kind of have their cake and eat it too. That was my takeaway from this FOMC meeting. Because the gist here is, we're going to pause now because we've been hiking rates at a fast pace, but we're going to continue hiking later. At least that's what they tell us. And I think part of the reason that they tell us is because the Fed knows that this market is hung up on everything that comes out of the central banker's mouth. I mean, the central bank's actions are the primary driver of these markets. And so they think that if they can convince the public and investors that they're going to fight inflation, that folks will believe it, and it'll kind of become a self-fulfilling prophecy. But here's the thing. If the Fed really wanted to fight inflation, first of all, why didn't they just hike yesterday, right? I mean, according to Powell, Inflation is still stubbornly high, and really it is. I mean, if you look at the core inflation, it's still over 5%. And I think that that's a good indication that the inflation fight does still have a long way to go. But I think that the inflation fight is hopeless. Now, here's part of the reason why. If you recall, we had Jerome Powell, the chairman of the Federal Reserve, just a couple months ago, telling us that the banking system was strong and resilient and sound, and that nothing could. Hey, constitutional stacker, I see him saying two of his favorite channels are live at once. How do you support them both? I don't know. Stay on this live stream, constitutional news. We got some good stuff to cover. But he was telling us that the banking system here in the U.S. was strong and resilient. There were no problems. I mean, never mind the fact that we still have something like $1.8 trillion worth of these troubled treasury assets, the ones that collapsed SVB back in March, on these banks' balance sheets. And of course, if the Fed does continue to hike rates, it's going to make the problem in the banking sector that much worse. And I think that had a lot to do with why Powell decided to skip, Powell and the rest of the FOMC. Now, I'm going to do something here. I haven't done this on a live stream before, but I'm going to play a clip for you because I thought this was interesting. And this was in response to a question regarding the banking system and whether or not these rate hikes would contribute to more pain in the banking sector. So I'm going to play this on the iPad. I don't know how this is going to work. You guys let me know.
Amount of commercial real estate in the banking system. A large part of it is in smaller banks. It's well distributed. To the extent it's well distributed, then the system could take losses. We do expect that there'll be losses, but there'll be banks that have concentrations, and those banks will experience larger losses. So we're well aware of that. We're monitoring it carefully.
Okay, so that is kind of a startling admission, if you ask me, from Jerome Powell. Can you turn up the volume on the tablet? Yeah, I can. If you want me to replay it, I guess, or I'll do that for future clips. Essentially, what he's telling us there is that he expects losses, and sorry for kind of the odd way of presenting that. Again, these live. Okay, good live stream. Constitutional Stacker says it's working fine. You guys could hear that. Guys and gals, all of you who are watching, and thank you if you are tuning in. And don't forget, if you want to help support the channel, smash that like button, consider subscribing if you haven't yet, all that good stuff. So Powell telling us that there probably will be losses and that they are monitoring things closely. Now, this is critical because we know that we are in the midst, in 2023, of one of the worst financial crises since 2008. So far, we have had 3 of the largest bank failures in U.S. history, and the total deposits of the banks that have failed are greater than the banks that failed in 2008. And Powell is well aware of this. Now, the Powell all the time is telling us how data dependent the Fed is. So, I mean, according to the Fed, at this FOMC meeting, they showed a dot plot that showed some of the FOMC participants are even expecting another 50 basis points in hikes by December. Powell, again, he mentioned that nobody was factoring in cuts this year. Any cuts would be at least a year out, way out in the future. However, the data dependency of the Fed, I think what that means is that if we do start to see more weakness in the banking sector, and if you ask me, more weakness is coming. I mean, I think that we are probably already in the midst of a recession that is only going to get worse as a result of these Fed policies, hiking rates in the midst of all this leverage. And, the thing is that a recession is necessary to, eliminate a lot of the problems that are systemic throughout our economy that are the result of the Fed keeping interest rates so low ever since the 2008 crisis, and even following, the dot-com bubble. I mean, this goes back a long way. But when this crisis rears its head, this economic crisis, which could be at any time, really, then I believe that the Fed will reverse course and, at the very least, halt their rate hikes. But very well, they could begin cutting rates and stimulating the economy. And I suspect that that is what they will be forced to do. And that means that the current expectation of markets, of more hikes, more inflation fighting, and subsequently, a buoying to the power of the US dollar and lower commodity prices, well, that's all going to go away. And when that expectation shifts, we are going to see much higher prices for commodities, in particular silver. Now, currently, you can see the expectation here is for another rate hike in July. This is the CME Fed Watch tool. So this tells us what investors and market participants are expecting, what's kind of priced into the market so far. And that taller column on the right there, 69.4% chance of another 25 basis point rate hike, only 30.6% chance of another pause in July. But should something happen between now and July, which is always possible in this powder keg economy, this house of cards, which has been built on the back of tremendous deficit spending, incredibly loose fiscal policy, incredibly loose monetary policy, the Fed doing QE to the tune of nearly $9 trillion. This whole system which has been built, which now that the Fed has gotten rates up to where they are, could collapse at any time. And again, that's why the Fed is pausing now, because they know the kind of dangers that lurk in this economy. And that clip I just played for you, Powell kind of acknowledging that for the first time. A couple months ago, after the bank started failing, Powell and Yellen were on damage control, and they were just telling us, hey, everything's fine, the banking system is sound and secure. But Powell now acknowledging that losses are coming. So, when Powell begins to acknowledge that there are losses coming in the economy, you know that things are bad, because the Fed almost never acknowledges when there is any kind of weakness. So if they're saying it, well, it's probably 10 times worse than it really is. So, that is why I think that we are going to see significantly looser policy moving forward than markets are anticipating right now. Excuse me. And that means that this continued low price for silver, right now around $24, I think is a huge buying opportunity. We got a dip down to like 23.50, I think, following that, which has since, we've gotten right back up to 24. That was a really nice dip to buy. I had already put an order in for a kilo bar of silver in one of these SD Bullion 10-year anniversary rounds, which, they were offering at spot because they had gotten an award for being the top 96 online retailer. So when they had that sale, I went ahead and pulled the trigger. I've got some more physical metal coming, but I do think that there is a really good opportunity still for more accumulation of hard assets. Someone just put in the chat that they were inspired by my videos to get their first 20-ounce Scottsdale Kit Kat. Yeah, these are awesome, aren't they? And congratulations to whoever put that in the chat. Sorry, when I'm on the phone here, the chat kind of fades in and out. So if I'm not quick, I can't see the username. There we go. It's popping back up. Josh Wang. Now I need 5 more for a pyramid. Yeah, once you get a bunch of these, you can stack them up into a pretty sweet stack. No doubt about that. Who else loves Scottsdale silver? Give me a thumbs up in the chat. Put a Y in the chat if you love Scottsdale silver, because I love these things. They are awesome. Malcolm Lang says using OBS. No, I'm just using the built-in YouTube app right now. I do use OBS sometimes when I stream from PC. Yeah, there's a Y. Yeah, these things are great. Now, Scottsdale silver, I've been stacking their stuff for a while. But one of the things about their products, they typically have a little bit of a higher premium than some other things. But if you pay attention and you look for the sales, you can stack this stuff at a very nice price. And then I think you're even getting a little extra value, because the Scottsdale stuff in the secondary market, I think, is a little better than some of the generic stuff. They are not common in Australia, but would love to get some. Yeah, well, Malcolm, you have got Perth Mint stuff. So, Perth Mint also pretty sweet mint, making some pretty nice physical products. I don't think I have any Perth Mint stuff out on the table right now. But yeah, if you live in Australia, you certainly have access to some nice bullion products. The other thing I wanted to talk about today, because the title of the video is "More Dollars Chasing Less Silver." So, should the Fed, reverse their policy decisions here, the hawkish positioning, and end up cutting, there will be more dollars. They will be expanding the size of the money supply. But what's the deal with less silver? Well, this was a really good article from Schiff Gold. Now, that's Peter Schiff's company, I guess, who sells precious metals. But But the title of this article is Silver is Significantly Underpriced Given the Looming Supply Shortage. Now, Brass King there is saying, let's do a platinum video soon. Yeah, we can do a platinum video. We can even talk about platinum a little bit here. And, one of the reasons I like platinum is because it's such a small supply. So it's very easy to move the needle rapidly on these metal markets where the supply is limited. I mean, we saw that in palladium following the Russian invasion of Ukraine last year. We saw that huge spike up in palladium. And when you have small supplies of metal, that's when the needle can really get moving fast. And when you think of silver, you probably don't think of it being so limited in supply. After all, it's more common than the other precious metals in the Earth's crust, right? I think the crust ratio is something like 7-1 between silver and gold. The mining ratio is like 10-1. So, I mean, that doesn't entirely explain why the price ratio is 81-1 right now. But, it is relatively more common than the other metals. But the thing about silver is that it gets consumed constantly. And that is very important because the other metals, platinum is kind of an industrial metal. Gold, not so much. Most of the gold that has ever been mined is still above ground. I've got someone asking me about Goldbacks. Are they worth collecting? They cost 4 to 5x face value. Thoughts, please. Well, Michael, if you're paying 4 to 5x over spot for your Goldbacks, you're paying too much. I do have a link in the description of this video to Alpine Gold Exchange. There's also one to SD Bullion. Both of them have very competitive pricing on the Goldbacks. I think for the smaller notes, I don't have any of them out here right now, but the one Goldback notes and such, Alpine Gold Exchange is your best bet. Typically, the markup there, you're going to be paying about double the metal value. So it's about 100% markup over spot, but not 2x. So it's 2x, not 5x. And then SD Bullion has some pretty good deals on the larger Goldback notes. But yeah, I do like Goldbacks. Since it's a live stream, I like interacting with the chat. We can chat about this for a minute, and then we'll get back to this silver supply problems. The supply article is very interesting. But Goldbacks, they have a lot of utility value. I suggest checking out the interview I did with Jeremy Corden, the CEO of Goldback Inc. I think that was about a month ago now. But if you just search for Goldback Smart Silver Stacker, that should pull that up. And the point of the Goldbacks is that, one, they're super fractional. So it's 1/1000th of an ounce of pure gold in a one Goldback note. So extremely, extremely fractional. And the rule with bullion products, typically the bigger the product you get, you buy a 10-ounce bar or a 20-ounce bar or a 100-ounce bar, there's going to be a slightly lower premium. If you go to more fractional things, the premiums will be higher. Now, Matt is saying in London, England, Goldbacks are 25 to 30 pounds each. Well, gosh, maybe I should take a trip to England and bring some Goldbacks. I have no idea what the laws are regarding importing them. Yeah, I wouldn't pay that, but here in the U.S. at least, they're fairly affordable, and I think they're great. I mean, I think that you can sell them back and get that premium back. So it's not like with say a fractional silver round, like a 1/10,000 silver round, where you buy it and you're paying like $40-50 an ounce for your silver. And then you go to sell it, and the bullion dealers are only pay you for the weight. You lose the premium. No, with Goldbacks, typically you can buy them and then sell them back into the open market for the same amount. So there's just a large amount of utility value there because they work great as a means of exchange. Jeremy was telling me that in Utah, there are more businesses that accept Goldbacks than accept Bitcoin by like a significant margin. So yeah, they're being used as a means of exchange. They're in 4 states right now. It's what is it? Wyoming, Utah, Nevada, and I think South Dakota is going to be next. I don't know. Put it in the chat if you know all the states for the Goldbacks. New Hampshire, that's the other one. So yeah, so Goldbacks are great. I wouldn't pay 5x spot though. Make sure you're not overpaying for them. And again, check out the link to Alpine Gold Exchange and SD Bullion. The one for Alpine Gold Exchange, just a quick disclaimer, it is a affiliate link, so if you click it and you buy something there, I will receive a small compensation, but it's no extra cost to you, so it helps support the channel. I appreciate it, and I buy Goldbacks myself. I've got skin in the game. I'm not just selling this, I'm just telling you what I'm doing. What can you buy with one Goldback? Anyone know? I don't. Well, one Goldback right now I think is worth about $3.70, so whatever you can buy for $3.70, assuming that the seller is willing to accept Goldbacks. Okay, so back to this article. Now, rarely on these live streams do I like read verbatim from articles. I'm not going to read this entire article to you, but I think it is worthwhile to examine some of the points here. Malcolm with a super chat says, "Who do you go through for custom coin? If you don't mind me asking, I did some bar designs, but I haven't been able to find people who can mint them." That's an interesting question. I don't really know off the top of my head. I've never commissioned a custom coin. If anybody knows some likely places, put them down in the chat. You could try giving SD Bullion a call. I'm sure they have relationships with a number of mints. I think Golden State Mint did Chris Dwayne's, but that was probably some larger runs. So maybe Golden State Mint might be something to look into. Again, I have no affiliation with them or anything. I just they do the Chris Dwayne mini mintages, which are pretty cool. I don't actually have any of those. I'd like to get my hands on them, but the premiums are just high. If I ever find a deal, I might pick some of those up. Let me know in the chat if anybody has any of Chris Dwayne's mini mintages. Those things are pretty cool. I typically like the themes that he espouses on those as well. But anyway, okay, so back to the supply article here, because this is very interesting. Excuse me. Before we get going here, there was an article, I guess, published on Seeking Alpha from Silver Bullion PTE Limited CEO Gregor Gregerson, and he mentioned that he was intrigued by unofficial chatter about upcoming silver scarcities due to rapidly growing photovoltaic demands. Now, excuse me, I'm going to drink a little water here, folks. Bear with me. Got a little bit of a frog in my throat. I'm still getting over a cold. It's kind of persistent. You know, ever since I had the virus that must not be named last year, I've had these colds that are kind of just challenging to get over. Hopefully, my body will right itself through healthy living. Anyway, so yeah, there's likely to be some significant increases in photovoltaic consumption. Now, last year we had the Silver Institute report that we had the largest silver deficit on record. I believe it was 237.7 million ounces. Now, that was the second year of deficit in a row. We had a deficit in 2021, but last year, 237.7 million ounce deficit. So that means that the consumption exceeded mining and recycling by almost 250 million ounces. And that's a huge deficit. You know, silver mining production is something like 800 million ounces per year. And then they get an additional 100 to 200 from recycling each year. But when you look at the scope of that deficit, you realize that, we'll run through the above ground silver in relatively short order if deficits like that persist. Now, it takes about 10 years to commence new mining operations at a silver mine. So you'd think the free market solution here would be, well, if, the supply of silver is in short supply, and that'll cause the price to go up. That'll incentivize new miners to go out there and produce more. But if there's a 10-year lag on new mining production, then new mining production isn't going to solve this problem. And one of the things here quoted in this paper is the International Energy Association, the IEA. They predict that this year in 2023, investment in the solar power industry is going to exceed the amount of money invested into oil production. Now that's huge. And I know a lot of people who watch this channel, and I kind of fall into this camp too, think, hey, solar power is never going to replace fossil fuels. We need fossil fuels. Yes, that is true. And you might also think, well, if we get a recession, that's going to destroy demand for photovoltaics and for more power production. And yes, in a free market, that would be true. But you have to keep in mind that governments around the world are subsidizing this solar movement. So even if you don't believe in the economics of alternative energy, and I'm pretty skeptical there too. I'm sure they have a place, but I don't think that they're going to replace fossil fuels anytime soon, at least not if we want to maintain our standard of living. But here's the thing. Governments are, through their policy instruments, creating a huge move into photovoltaics. Now, another thing that you might have heard is that solar cells are becoming more efficient. And that is true. They use less and less silver over the years. They used to use a lot more. There are some alternative metals like copper that can be used, but that doesn't really work out so well. The panels don't produce as much power, and they end up wearing out faster. But there was a research paper published by scientists at the University of New South Wales, and according to this paper here, solar manufacturers will likely require over 20% of current annual silver supply by 2027, and by 2050, solar panel production will use approximately 85 to 98% of current global silver reserves. Now, this is because there are these new N type and PERC type cells. I'm sorry, the PERC type are the current size. And again, I'm not an engineer or an expert in technology by any means, but there are some new types of technology, this N type, and I think the other one is SHJ, that use more silver. So it's a more powerful, more efficient solar technology, but it requires more silver. So this trend of the diminishing amount of silver being used in the solar panels is changing because of these new types of solar panels. And that is a critical development because that means that this diminishing use of silver that a lot of market participants had kind of been factoring in, this may very well not come into play here. And we may see more silver being used per panel because of this new technology. And also, I'll say this too, they don't really go into it in this article, but if this new technology is more efficient, it may mean that solar is a more viable competitor to fossil fuels. And that means, more silver is going to be getting consumed as more panels are being built. I've got Ray Henry in the chat saying 500 ounces of silver per cruise missile. I've heard that said, and I do believe, I'm sure that there's quite a bit of silver in a cruise missile. I'm not sure if it's 500 ounces, like a whole monster box of Silver Eagles going into a cruise missile. It could be true. A lot goes into, electric vehicles. I know that they use silver in these high-tech electronics because silver, of all the metals on the periodic table, it is the absolute best conductor of both heat and electricity. So when you really need conductors to work properly, you use silver. And I don't know if anybody has a source for that amount of silver being used in warhead. Feel free to put it in the chat. If you're watching this later, put it in the comments. I'm not sure. That is something I see that goes around all the time. And hey, we're probably going to be launching a lot of cruise missiles over the next couple of years. I mean, I didn't really plan on getting into the World War III topic, but that is something we are always on the verge of these days. And certainly all of these weapons, drones, smart weapons, I'm sure they all use a lot of silver. And, when you make silver, when it goes into a solar panel or a cell phone, yeah, it has a lifespan and ultimately ends up in a small unrecoverable amount in a landfill. But hey, you put 500 ounces of silver into a guided missile, and well, what happens when the missile blows up? I mean, it's just vaporized. There's no way you're going to recover that at all. So for all intents and purposes, silver used in these weapons is 100% unrecoverable. Now, I'm seeing a lot of estimates about how much silver is above ground. I think the most accurate estimate in terms of like everything, jewelry, bullion, flatware, something like 3 billion ounces. But that's really not that much silver. It's a lot less than gold. I think gold is something like 6.7 billion ounces of above ground available gold. So, if we had a deficit last year of 237 million ounces of silver, that 3 billion ounce above ground supply, you burn through that pretty fast. And that is at the rate we are consuming silver now. But the thing about silver, it's so useful in all these high-tech applications, and not just high-tech applications, all sorts of things, medicine, bandages, wound treatment, water purification, drones, electronics, satellites. I mean, everything uses silver. It's like the second most useful commodity after petroleum in terms of the sheer volume of uses for this stuff. So, that's at the rate we're currently burning through silver. We may very well begin burning through this a lot faster because there's going to be new technologies that come out that require silver. I mean, who knows? Maybe AI is going to require more silver. I don't know. You don't know what you don't know. You don't know what's coming down the pipe, but advanced electronics tend to require silver because of its unique physical properties. So very likely, not just for photovoltaics, but for a lot of things, silver is going to be in high demand moving forward. Now, here's a quote from this guy, Gergeson, to wrap this article up. He said, In conclusion, the photovoltaic industry's impending impact on silver pricing cannot be overlooked. As the silver shortages loom on the horizon, it is only a matter of time before mainstream media reports on these significant developments. Once the news spread, we can anticipate substantial price surges in the silver market. Now, he probably has a dog in the fight. Doesn't sound like he's a completely unbiased individual when it comes to silver. But, I mean, what he's saying makes sense, and something that you got to keep in mind when it comes to making solar panels or making any of these high tech items or anything that you need physical silver for. One thing that doesn't work is a paper futures contract. That way that we devise the spot price of silver that everybody's so hung up on. That is just the price, keep in mind, of a futures contract at a place like the CME, the LME, one of these commodities exchanges. And that means that the spot price of silver, is being determined in a place where they trade something like hundreds of times more silver than gets produced. So they'll trade in one day 800 million ounces of silver, no problem. Paper going back and forth. And that's an annual production of silver. So, you can't build a solar panel with a futures contract. You just can't do it. And the vast majority of the silver market is really a paper derivative of the real thing. So, if you want to benefit from the coming shortages of silver, I wouldn't be buying SLV. I wouldn't be buying an ETF. I wouldn't be buying a futures contract. I would get your hands on real physical metal. Now, again, I always have to say, none of this is financial advice, because I don't want to get attacked in this incredibly litigious society that we live in the future. And I'm not providing financial advice. I mean, everybody's situation is different. If you got a bunch of credit card debt or something like that, don't go out and buy silver, obviously. Focus on the most important things first. Make sure you have some fiat in case you get emergency expenses, so you don't have to go out and liquidate your metal to cover unexpected expenses. That can absolutely happen, and it can make you sell your silver at an inopportune time. I had some comments on the channel recently from a regular viewer saying, he's getting frustrated with precious metals, and it looked like they were never going to do anything. And, well, listen, stacking is a long-term proposition. We're not going to see the world run out of silver tomorrow. It's not going to run out of silver next year. It's probably never going to run out of silver because, shortages, they don't mean that you can't get this stuff. What it does mean is that the supply available doesn't meet the demand that exists. And so to compensate for that, the price has to rise. And so that's what I think is coming. If you're enjoying this video, please do smash that like button. Don't forget to do that. Thank you very much, Constitutional Stacker, for that super chat. Always appreciated. Anybody watching, if you leave me a super chat, I am eternally grateful to you for supporting these videos, trying to get this information out there. I don't always get everything right on this channel, but I do strive to provide you who are watching with solid information. And sometimes it's just, my own thoughts and for whatever that's worth. But listen, very few people are getting their hands on physical metal right now. I mean, if you've got a circle of friends and family, I'm sure you're aware that very few of them take this stuff seriously. And, in this era of fiat currency and central banks that are running amok, destroying the value of the currency, and in this era of, specifically for silver, a time when the price is so incredibly low. I mean, look at the previous highs in silver. In 1980, it hit $50. And, back in 2011, it did too. And even if you just go back to 2011, look at the national debt in 2011. What was it? It was probably like $12 trillion. I don't know the exact number, something like that. Now we're at 31.8. You go back to 1980, what was the national debt? $1 trillion. Now $31.8 trillion. And, silver was $50 then, and it's like $24 now. Find one other commodity that is below its 1980 price. I don't think you can do it. I don't think it exists. It's incredible, how cheap silver is when you consider how much the dollar has been devalued since that time, even since 2011. Silver is just such an undervalued asset, and it is being decimated, the supply, as a result of that. 237 million ounce deficit in 2022. that adds up over time, and it's going to start eating into those above ground supplies. Eventually, they're going to dry up, and the folks who actually have real metal, not ETFs or futures contracts, I think we're ultimately going to benefit from that, and we're going to come out ahead. So I hope that everybody out there is getting their hands on physical metal. You got to do what's right for you. I'm not telling you what to do with your money, but I am telling you what I'm doing with mine, and that is continuing to accumulate hard assets, getting exposure to these. I also own some mining shares and things like that, but really my focus is on physical metal and specifically silver because, gold is great. I do like gold. It's a time-honored inflation hedge, but listen, there's 6.7 billion ounces of gold above ground. It's like all the gold that has ever been mined still exists. A lot more silver than that has been mined, but most of it has been consumed. And the above ground stocks today are very low compared to historical levels. No one seems to be paying attention to that. The uses for silver continue to rise. We've got massive deficits, the biggest deficit for physical silver on record just last year. I'm sure we're going to have another one this year. Maybe not as big, but we are living in a time of silver deficits, and markets haven't reacted to that yet. And to me, that represents an opportunity. And, I'm not getting frustrated with low silver prices because I know the writing is on the wall for this stuff. From many perspectives, from the perspective of being an inflation hedge, because inflation we know is a persistent problem. I mean, even Jerome Powell is acknowledging that now. From the perspective that we have a massive level of debt in this country and growing. I mean, they just suspended the debt ceiling for a reason. It wasn't because they want to balance the budget. And also because the real physical metal, it is an incredibly unloved asset these days. So if you like stacking, you like buying when the blood is in the street. If you want to, who was it that said that? Meyer Rothschild, I think, buy when blood is in the street. Well, that means buying assets that other people aren't buying, buying assets that are unloved. I wouldn't go out and buy Nvidia, these AI tech stocks, which are now in the formation of another giant bubble. I would be getting my hands on hard assets, things that other people scoff at. I just think it's so funny, the general public. You see these videos with Mark Dice, where he goes out and he offers people like a gold bar or a candy bar, and they take the candy bar. It just shows you how removed people are as a result of, an intentional, I believe, intentional campaign to diminish the role of hard money and to promote this debt-loving mindset, the central bank worshipping mindset that we have in the world today. But hey, if you like stacking, that's to your advantage because you can get more of this stuff cheaper. And that means when the price does move, we will be in a strong position to benefit. So I hope you enjoyed this live stream. Russ Ream says people have no idea about gold and silver. It's a fact. I mean, they just have no idea. No idea whatsoever. And they're going to get an education, I think. It's not going to be a pleasant one. But I do believe that sooner rather than later, folks are going to get a very harsh lesson in the value of, real money and what fiat money is really worth. So, thank you very much, everybody, for tuning into this live stream. Always appreciate it. You are the best. Thank you for those of you who did the super chat and for the support. I really appreciate it. It helps me make more of these videos for all of you. And I hope you stay safe, and I hope you're doing some stacking, because I know it might seem like the price of silver is going to stay low forever, but I think that in the future, 10 years out or less, could be a lot less, we're going to look back on the days of $24 silver, and our primary thought is going to be, I can't believe we used to be able to get this stuff for that price. So I'm trying to accumulate as much of it as I reasonably can before that day comes. Leave me a comment down below to let me know what you think. Thanks for watching, everybody. Smash that like button. Don't forget to like, comment, and subscribe, and I will catch you next time. Smart Silver Stacker out.